Hey guys, welcome to another Trade Genius podcast. Bob and Phil here. As always, guys, as we are at all-time highs on the markets, there's a lot of weird things starting to go all different directions. We're going to talk about what these things are and what this means for the market and ultimately your portfolio going forward. So let's dive in.
Trade Genius.
Hey buddy, it's Bob with Trade Genius. Hey, it is holiday season and our holiday specials are running right now. Use promo code HOLIDAY. You already blew it. You missed the Black Friday specials, but this is your second chance to take advantage of some of the best pricing that we do for the year. Check us out, tradelikeagenius.com, tradegenius.co, tradegeniusacademy.com. All roads lead to Trade Genius. Check us out. Incredible deals. Thanks for listening.
Okay, Bob, we're going to cover a few different things here. All of them, I think, in a weird way, all mean the same thing.
Yeah, you ever, there was this video of this glass walkway, like bridge in China, that when you step on it, it gives like the appearance of a fracture.
Yeah.
And then, at some point, fractured glass breaks. Mm-hmm. And I think what we're seeing now, this week, we're seeing a lot of fractures, really weird anomalies. And we're going to show you 4 different kind of views that I think are saying the same thing. And the first one I want to bring up, in fact, I'll let you talk about this one, Phil, because you found this one. But this one, we knew this intuitively, and this is why everybody's so frustrated. When's this market going to crash? But this is a wild one, Phil.
Yeah, it's an interesting market because we have various things that are in like full-on bubbles. But then you have something like Bitcoin where the Google trend for Bitcoin is at like the lows, even though it's trading almost, approaching all-time highs again because of the ETF flows. So it's a very interesting market in that regard. But call options, right? Here we go again. Why does this matter? Because the last time we were in this frenzy of call options was the GameStop, right? And AMC. And a lot of people made a lot of money until they didn't. And down big. And now I think, SMCI is probably like the latest thing along with NVIDIA. But we started seeing posts this morning on guys were down $70,000 because they were just, they kept trying to compound their call options and they're getting smoked right now because SMCI, if you guys hadn't noticed, once we poked over $1,000, it just went whoosh. And at some point, the same thing's going to happen to the stock market. Now, SMCI might claw back or it might not. But, these things tend to implode on themselves because really it's just leverage upon leverage upon leverage. So I just think it's really interesting that here we are again, like nobody's learned their lesson and it feels good and it seems like it's working on the way up. Unfortunately, 99% of the people that are doing this stuff end up giving it all back and then some. So, no lesson learned obviously from the last go around. The other one, Bob, and I'll kick it back over to you. Insiders are selling a lot right now. These guys are headed for the hills. Probably the most notable one that's probably been in the most headlines is Jeff Bezos. I mean, he's selling shares and stock hand over fist right now, billions and billions of dollars worth. So what do they know that we don't? Well, those guys have access to more information than we have because, they're the elite. And I think they just see that inevitably there's going to be a big slowdown. And these guys have insider information. And if there's a general consensus that we are going into a recession, then this is the prime time to be selling out near market highs.
Yeah, and I think these first 2 charts actually go together because what they've been doing is they've been selling their shares and they're keeping the pump going by what they call it call replacement strategy, right? Yep. And those guys don't care. Those guys, if they ran SMCI, and we're going to talk about that one in a minute, if they ran that thing up from 300 to 900, hopped off, and then made $20 million, but they throw another $1 million in calls in there, they actually don't care if they lose that whole million if it comes to that. It's just that the idiots that follow behind them end up getting their heads handed to them. And I want to shift gears a little bit here, Phil, because I think Bitcoin, natural gas, oil are all kind of having the same kind of grief, if you will, but they're all getting bid now. And the CEO of EQT. I own this stock. I love this stock. Largest natural gas producer. Probably ExxonMobil not probably rivals them in the United States. But he basically said, we're done with the government. The government keeps screwing around with us and our industry. And what's going to happen here is that we're just going to shut production down. And I think what's happening is they're probably getting mixed messages. Hey, we want you to produce. We'll give you an export market. Then when they produce, we're going to cut off the export market so we can kill natural gas prices so we can look good on our inflation target. Well, you only do that once or twice to CEOs of companies, and they'll be like, screw you. I'll just do the Saudi approach and I'll just cut production, and there's not enough of it out there. And so he said, strap in for the next 6 to 9 months on natural gas. He said it's going to get wild, and that's a hated industry. And then same with oil. Energy this week has exploded, Phil. We knew oil was going into a seasonal. Natural gas is still a little bit yet to go, but natural gas companies are starting to front run this. And so, we're getting moves in REPX, in EQT, in Devon Energy, ExxonMobil. They're all starting to lift. And if that lifts, Phil, then there's no way they're going to be reducing interest rates this year, because they won't be able to get the inflation number down where Powell can justify it. And it's an absolute disaster. But the chart we've all been waiting for, when you talk about market fractures, this is what you look for. This is screaming at you. And if NVIDIA follows suit later this week on earnings, then it's over. It's the Cisco of 2000 all over again. And I went ahead and I put, basically we bullishly engulfed the last 2 days. We're falling even below this right now. You and I are doing this podcast, market's still open, but we broke the lows of even this chart so far for today. And we're really at a point now where we may flip our Ranger there. That's the long-term support we have. And I just did a Eiffel Tower chart here, Phil, just to show people what happens when a parabola breaks. You just don't break 20, 30% and then climb back up again. Well, you might before you have your ultimate failure, but ultimately you're gonna give 88% of it back. And we're looking at 307 here for the price. And you know what? That only brings you back to 3 months ago. I mean, that's how ridiculous this price action was. And if this thing really blows up, Phil, we're looking at a fib extension to take SMCI back down to 145. It's not like these guys are invented a new way to provide energy. These guys are retailers reselling somebody else's chips. And why they're outrunning the chip manufacturers is beyond me. So I thought all these things tie together. I'm looking for the great rotation. I'm looking for tech out, energy in. And I thought I want to show you guys some of the fractures that are happening. If the producers stop producing, we're going to get bigger moves in energy prices. And if tech blows up like it's starting to blow, and it's not the only one. Roku blew up today. You had Dropbox down 19% today. So you're starting to get these fractures in these tech companies that have just been lifted up, basically anonymously through index buying, Phil. And I think it's going to portend a rough road ahead. Put it this way, I think the easy money's gone, regardless of what the market does. I think the easy money's gone. This is going to become a trader's market again.
Yeah, look, my belief is that it's the .com bubble 2.0. And it's all going to end with Eiffel Towers on this stuff. Never mind, price to earnings. They're doing price to sales or price to innovation. And what is that, right? That's just justifying leverage, in my opinion. So we're going to have probably a reality check in these markets as we progress through this year. And I think that if you're buying at these levels, I mean, I feel for you, because I think the downside risks here are tremendous. I think you need to go back, you need to study the charts and how they looked in 2000, 2001, and look at the market structures and how they started to break down off those highs. Nothing's different, right? Nothing new under the sun. You're going to see the same structures. You're going to see the same lower highs start to develop, and the fall will probably be quicker than the climb. As dramatic as these increases have been, the fall will be more dramatic. So it just takes catalysts, and we certainly have them. I was reading something today, Bob, on SMCI. They're channel stuffing to try to make their numbers look justified, because they're trying to chase the price of the stock versus the other way around, where the price of the stock should be chasing performance, right? So priorities are all backwards. Leverage is all way overdone, and it's never going to end well in that scenario. It's just a matter of when. Now, markets can be irrational longer than you can be solvent. So that's why instead of trying to pick a level, we look for stuff like this, where it's like, okay, now we're starting to break down. We have some structural weakness. Now we look for stuff like a lower high that we can potentially short. And if it goes higher, you're invalidated, so be it. But rather than blindly try to step in front of the freight train, which a lot of people do, like they did in SMCI, they're just going in there buying calls blindly, and then this happens, and now they're crying about their wife doesn't know that they blew over the entire account. So anyway, very dangerous environment. And I think the next 2 weeks going into the end of March or end of February, I think a lot of people have their head in the sand in terms of seasonality. I don't think a lot of people pay much attention to seasonality. They get caught up in the the bullishness of it all. But this is the worst period for the markets historically over the next 2 to 3 weeks. And this is not a place to be buying the highs in the market at all. And I don't care if it goes higher. It's not statistically smart. And all we can do is go off of probabilities because we don't know the future exactly. But this right here, this window, given the run up that we've had, it's a recipe for a big pullback in everything. And I'm talking stocks, I'm talking crypto. And yes, I know the ETF flows are bullish for Bitcoin and all that stuff, but still seasonality, all of a sudden next week, maybe the flows all of a sudden die off. That's how this stuff goes. You just, so you kind of go with the probabilities. I'm not saying it's over, that's probably a dip to buy in March, but be very cautious here.
Yeah, no, absolutely. We'll cover it tomorrow. We acted you guys too much today. Hey, if you like what we do, come check us out. Trade Genius, we got specials running, and we think we have a pretty good pulse on what's going on. You can check our different bundles, and please support us in the room here, and we'll see you guys tomorrow.
See you.
Trade Genius.